All right, our first strategy for this couple was to buy investment property. We worked out that they could afford a place for 420 grand. Now, their on costs were stamp duty, etc. So they borrowed the full amount of 435. Their annual rent was 20 grand. The interest costs were 30 grand. That's at that 7%. It's probably dropped a bit by now. Other costs like legals, etc., 4,500. Now, depreciation is not something you write a check out for every year. It's an actual deduction you get off the income for the fact that our building and fixtures are going down in value. It's very, very powerful. This means we actually save tax on other income. These guys are only on a marginal tax rate of 31.5%, which is where most of the population is in terms of tax rates. So you can see the saving they're going to get there, 7,400 on tax. So after tax, that $420,000 property is only costing them $142 per week. Now, for this first strategy, we're going to assume a growth rate of 5%. Now, we're very, very conservative with our assumptions, as that's the long-term growth rate for property in Australia over the last 100 years. On that, we can't make a market deliver return. We can only be in the market for when it goes up. So if someone tells you, I'm going to go get you whatever return, you should probably run. What they can say is, I'm going to put you in the market and get you a return based on that. No one can make the market move. So at 5%, we're going to more than double the value of that property in 15 years. After we pay off the debt, we'll have $438,000 left. So let's start a scoreboard. Our target's $1.43 million. And as you can see, we're less than a third of the way there, and we spent more than half of our budget of $250 per week. So we can't go buy 3 properties at once. First of all, we don't have enough equity, and we don't have enough cash flow to be able to afford it. I also believe single strategy solutions are very, very dangerous. Who's seen that book, Go Buy 15 Properties in 2.5 Seconds, or some variation? We all know it's stupid, but it's a bestseller. We've all bought it or picked it up and asked ourselves, can I do that? Is that real? We all know it's not. You see, all these strategies go through a success period, but they ultimately end up failing. They go through the success period when property's going up. It's easy. You buy one, borrow again, buy another, eventually destroying the equity we live off. Then you go through, like we just had, 6 years of no growth. We can't go to the bank to get it revalued so we can live off the equity and pay back the capital, so they fail. Storm Financial got people to borrow a lot of money and put it in a very volatile asset being shares. So single strategy, almost cult-like beliefs in one solution are very, very dangerous. We want diversified strategies as well as diversified investments.